Hello, welcome to Cryptonomy. The SMA breakdown no one talks about, the bottom is not in. First, my name is Mo. I'm a computer and data scientist. I was a crypto investor for the past 6 years, and I turned a small, humble portfolio into 6 figures this cycle. So if you want to learn about some of the strategies that worked for me and some of the mistakes I did along the way, maybe try watching this video, and if you enjoy it, please like and subscribe. So today what we're going to be discussing is the 3 very important moving averages, right? 50, 100, and 200 week SMAs. But we're going to also touch on the 20 week SMA and the 300 and even talk about the 400 week SMA. But to keep it simple, we're going to carry the first phase of this analysis only on these 3. If we go and analyze the previous market cycles, so you can ignore some of these signs for now. I'm going to explain them because there are 2 arguments that point in the same direction. One is the SMA breakdowns, those ones, and how Bitcoin interplays around them. And the second one is the first leg of the bear market phase. And they both converge to the same result in a way, right? Before we continue, nothing that is said in this video is financial advice, of course. Please do your own research. It's for educational purposes only. And this is only 1 or 2 pieces of the puzzle of the whole picture, right? We're all guessing at best, and I'm only a speculator in the market. So, but I do hope you can learn something from here, right? Some of the things we're going to discuss are going to still blow your mind. Just saying. The first leg down is defined as this move. And we do get it in every cycle. All right, so that's the first leg down there. That's the second one here. And that's the third one there. And can be extended even to here. What's important about the leg downs that I want you to take away is that we find the bottom usually in February. Here it happened in December one time, but in December you do get some kind of strength, right? And then you top out late December, early January, and you find the bottom of the first leg in February. Same as here, you check. February, we got some strength into December and right into January. Similar here, we got some strength in December, and we found the bottom in late January here, but you can say like early February, late January is fine. So the argument that you can devise from this is that we're actually at this phase right here. That's what this is. And if you take the percentages and the days of all those first leg crashes, right? For example, this one was minus 52%, and it took 77 days. Then you do get a zone within there, right? So if this is the top, then 18 days from the top to here, and 102 days to here. And it's 102 because we also included this one, April, and this one, because we do retest. We do come back to that zone later, right? So it's possible to also go there during that time phase. So we got that time, 18 to 102 days, and minus 52 from the top to this range, and minus 70% from the top to this range. So that's the first argument, right? If you analyze the first leg downs, usually they converge towards this zone. And now what's interesting, the moving averages also tell the same story, right? If we go analyze this 2021-22 bear market, right? This is where it gets interesting. You do see that we found support for the first leg down move on the 100-week moving average, right? That move right there. From here to here. All right. If you go to the previous bear market, then you can see we have found the first support around the level of the 50-week SMA, not the 100. Here it happened on the 100-week SMA. This was the December strength, which we can refer to as this December strength, but the February low was found on the 50-week SMA. If you go back one more cycle, did anyone guess it? We will find the support at the near the 20-week SMA. Interesting, right? Very interesting. But we found it in December. The February was, we kind of got it there again in February, and we broke down from it, and then we flipped it into resistance. So that's the caveat here. What you realize is that the cycle is kind of deleting some of the left side of the move and moving towards the more to the right side. So instead of touching the low in December, we start to always touch a low in February, but we still find strength in December in every bear market cycle, even this one. But it's getting diminishing returns, relief rallies in December. That's what we're seeing. And we're getting closer to the lower or the longer time frame SMAs. So it was the 20, then the 50, then the 100, then you guess it. If you take the percentages, right, that we just analyzed, those, the first leg down, the first percentages moves of every bear market, right, the first crash. Yes, you guessed it. We reached the 200-week SMA. Interesting, right? Both arguments converge to the same result. That would just mean there's a higher chance that we may be going lower for longer. And what we're seeing right now might be the December strength, but we might find the top very soon. That's what this argument says. And I am lenient toward that argument right now. This is where I am kind of hedging and basing my trades on. But of course, this is not educational. This is only for educational purposes only. There are probably a lot of factors that are unknown. But by finding more of these factors, then we can build our edge as speculators of the market and be profitable, right? That's why I like to talk about things that nobody really knows or sees yet. They usually see it after, because that's what gives a profitable speculator in a market their edge, right? And it does make sense. It does make sense. We've only went down around 36%. Now, the least we went down on the first leg down move was last 2021 November bear market, which was minus 52%, which puts us at the top range of that yellow zone. Minus 70% would be the extreme range, which puts us around 38K, which I don't think we're going to go down there, right? My bias is that we're probably going to hover around this area. That's where my bias is going through. Now, what's also interesting is that after you find support, you usually break that level, right? For example, in the previous cycle, it was on the 200-week SMA. Sorry, 100-week SMA. This consolidation phase that happened here happened between the 100 and 50-week SMAs, and when we broke that consolidation phase, we found support at the lower moving average, below it in that case, right? Which corresponds to that zone right here, right? What if this is right here the December strength, if you compare it to the previous cycle, right? So that's that. I'm gonna copy one of that. I'm gonna put it here. That's that. And what if that's gonna be somewhere around there, right? Oh no. Somewhere around there. And what if that break that happens here and we find support at the next moving average, right? If we turn that to, for example, orange, what if that is that somewhere here? Of course, here I'm not considering times. We do have to maybe in the next video we have to analyze the consolidation phase and know how long that one lasts on average, what's the minimum range, the maximum range, and what month do we usually break down to actually get some timing, right? But this is just all approximate from just simple seeing. We find support maybe at the 300 week, maybe at the 400 week. You can see last cycle we actually found support on the 300 week SMA. Wouldn't it be possible for the next leg down to go down to the 400-week SMA. This will probably start to go a little bit higher as well. That would put us at 40K. That would make sense. Every cycle, we tend to go down levels, right? Here we found most of our support at the 200-week SMA. But yeah, we got a black swan event that took us to the 300-week SMA, but that was foreshadowing for the next event, right? And here we actually found support and broke down below the 300-week SMA. In the previous cycle, it was the 200-week, which is interesting, similar to here. And the previous one was also the 200-week SMA. Are we possibly starting to dive deeper into the longer time frame SMAs? Because that's what it seems to be doing at a very, very slow rate. Anyways, I do hope you actually enjoyed this video and learned something. If you did like it and watched this far, do please like and subscribe. And let me know in the comment if you have any counter arguments or anything that I missed out. Thank you so much.